Well, natural gas executives recently convened with think tank analysts, and their conclusions, well, may surprise you. Let's bring in Bloomberg's Adam Johnson with the latest on that. So some surprises, perhaps.
Yeah, well,
here.
For starters, how about nat gas under $5 through 2013? Think of that. That's Wood Mackenzie. That was one of the think tank analysts that came out with that. They say that Wall Street analysts are way too bullish. Of course, Wall Street is looking for 6 to 6.5 just in the second half of this year, and then in typical Wall Street fashion, that it races ahead next year. They say, in fact, the tone was decidedly bearish at the Colorado Oil and Gas Association last week. Wells Fargo's David Tamarin put a piece out, and he talks about what came out of this. There are really three conclusions. Let me run you through them. Number one, total lack of demand.
That'll do it, right?
That'll do it. Problem number one. Problem number two, cheaper long-term supply. And we're going to go through these in greater detail. Number three, cap and trade, which should be helping, maybe isn't. The pros say that Wall Street just, quote, I love this, Wall Street doesn't get it, unquote. That was one of the comments that came out of this. They said there's a disconnect between perception and reality. They talk about Wall Street assuming that what will fix the problem between supply and demand is the decline in production. In other words, you know, it's like when you buy a car. It's worth the most the day you drive it off the lot, and as soon as you drive it off, well, it's worth less. Same thing with oil and gas. You drill a well, and of course the gas starts coming out of it. It's worth less. Wall Street thinks that it's that declining production that'll fix it. They say, no, guys, you don't get it. They say demand has gone AWOL. I mean, the comments are unbelievable. You can't make this stuff up, guys. They say that there is no marginal industrial demand. There's no demand from utilities, which, of course, you know, would respond to hot weather and ACs because the weather's been cold. They say it's a tepid outlook for 12 to 18 months.
Wow.
If I haven't depressed you now, shall we continue with supply?
Let's talk about supply, because everybody talks about that there's tons of supply out there, certainly when it comes to the oil market. What about for natural gas?
Yeah, for natural gas, there appears to be tremendous amount of supply, and there are a few things at work. Number one, we've talked in the past about shale, cheap nat gas that can be drilled, and there is tons of it. Supposedly, I read one report that said there is 3 times as much nat gas trapped in shale as Saudi Arabia has crude oil. Just to put things in perspective, there's now technology to access that. They say that that has brought the break-even price from $7.50 much lower. And, of course, you speak to some analysts, Howard Weil, Louis Krebs, et cetera, they're talking about break-even under $4.
Wow.
Adam, you talked about cap and trade. How's that going to affect the equation, if at all?
Yeah, this is very surprising. You would think that cap and trade would benefit nat gas companies. Why? Because cap and trade imposes these carbon rules on utilities that pollute if they use coal, so you'd think they'd switch to nat gas. Well, apparently, according to these executives who attended this conference, they said coal lobbyists have been very effective at getting Congress to give them credits out sometimes 10, 12 years so that they can effectively continue to produce coal, continue to burn, and they've been given the credits so that they almost don't have to meet cap and trade, at least in the first 10 to 12 years. Why? Jobs. Yep. That's what it boils down to. They want to preserve jobs. Very surprising, yeah, cap and trade should benefit, and yet it doesn't. It's very surprising.
All right, so a pretty bearish call when it comes to natural gas. So I'm curious if anybody you've talked to are saying, but keep a watch on these, these stocks. Are there any names that they're kind of talking about?
Well, yeah. This particular analyst, David Tamarin of Wells Fargo, said that he would love to come in and say buy them because they're down. Nat gas is down. It's on its way to 3. But he says he can't get excited except for 5 stocks. And let me give you those 5 stocks. On the earnings front, and again, this is pretty apropos because we're now in earnings season. Right. These are upcoming. Anadarko, ticker APC. On the smaller cap side, Berry Petroleum, BRY. Again, he likes these 2 companies going into earnings. And then for specific drilling catalysts, he likes the following 3 names. Number 1, Forest Petroleum, FST, Newfield Exploration, NFX, and finally, a Pioneer, PXD. 5 names that he says actually can do well in spite of everything else that's happening in the longer-term context.
Despite of all that negativity in general.
Yeah, surprising negativity.
Yeah.
I read this and I said, my God, I've got to talk about this. You never hear people, especially industry executives, they're always wanting to talk up, talk the book. But in this case, no. Very surprising. And something else he said that could change a little bit, and that is that whereas utilities have been willing to go out 10 years and book up these contracts because they're effectively just, it's like they're just producers. They don't see the upside in coal. Right. the nat gas executives don't want to give up all their upside because they always want to be there in case you get the sudden pop. He's saying things may change and nat gas executives may have to be more willing to forward sell their production going out 7, 8, 9 years. In fact, there was a survey that was taken, and of the panelists, 4 were asked, would you sell out 10 years? Only 1 said yes.
Well, you said you can't make it up, right?
You can't make this stuff up.
All right, Adam, thank you so much. Our Adam Johnson.